Hi guys, my name is Daniel and this is my channel where I bring you cryptocurrency news, project reviews and informations. My goal is to bring you objective information so that in the end you can make your own decision about investing or not in cryptocurrency projects. I do have to remind you though that all the information presented here is for educational purposes only and that I am not a financial advisor. Today, I will review the Avalanche network. I will walk you through the project, its tokenomics, and the technology behind it. Make sure to stay until the end to see my risk management model of the project. Let's get started. What is AVAX? AVAX is the native token of the Avalanche network, and it's used to pay for fees, secure the network through staking, and account as a unit of measure for all subnets building on Avalanche. What is Avalanche? Avalanche is a network of networks, consisting of multiple subnets, each of them running its own chain. Avalanche is a high-performance, customizable and secure blockchain platform. Subnets are independent chains with their own rules composed of a dynamic set of Avalanche validators. Subnets can have multiple blockchains and the validator can be a part of more than one subnet. All subnet validators must validate the Avalanche primary network. What problem does it solve? Avalanche aims to solve the blockchain trilemma, so by design it is scalable, secure, and decentralized. Avalanche is also built to be governable by enabling token holders to participate in governance voting and interoperable by allowing other blockchains to be built on top and to easily interact with other blockchains. How does it solve it? Avalanche solves the scalability problem by using an innovative consensus protocol mechanism that combines features of both classical consensus protocols and Nakamoto consensus protocols. Let's explore how this works. So the user creates a transaction which is sent to a validator node. From there, the transaction is propagated to other nodes by gossiping. If a double spend attack happens, the node chooses a subset of nodes that queries the transaction. The transaction that gets a majority of votes from those nodes is validated. The process is repeated until all nodes agree on one transaction. Avalanche can also scale to thousands of millions of nodes through its no consensus protocol, which creates a secure and decentralized network. Does it need solving? For widespread adoption to be achieved, there is a need for a highly scalable blockchain that has low fees. If blockchain technology is to succeed and for play to earn, fee to earn, or a blockchain metaverse to be built, the world needs a secure, fast, and cheap platform. Otherwise, the traditional payment processing services or the available cloud solutions are better. So yes, the blockchain trilemma needs solving before onboarding mainstream users. The question is if Avalanche will succeed and if more than one blockchain can coexist and make it a reality. Use cases and adoption. Avalanche goals are building application-specific blockchains, public and private, building and launching dApps, and building assets. To run a node, users need to stake AVAX, which locks the token for a given period. The period and staking rewards are set by on-chain governance. AVAX network doesn't use slash as a penalty, so the tokens will be released in full when the locking period expires. Avalanche's main goal is to offer a platform for the creation, transfer, and trading of assets. Whitepaper. On avalabs.org/whitepapers, there are 4 documents, each focusing on one aspect of Avalanche network. One for the platform, one for the consensus protocol, one for AVAX token, and one for stablecoins. The information from all of them are discussed in the specific chapters of this video, but if you want to go deeper in the Avalanche network or conduct your own research, I will leave the link for them in the description. Roadmap. Avalanche has no actualized roadmap. In the original roadmap, which is thin in my opinion, they managed to achieve all the milestones mostly regarding the mainnet launch and the Ethereum bridge. At the moment, it seems that the project is going nowhere. The team. Emir Gansirer is the CEO of Avalabs. He studied at Princeton and is an assistant professor at Cornell. He didn't work for any tech company before founding Avalabs. Avalabs has 265 employees on LinkedIn and is the company behind the Avalanche network. Backers and partnerships. There are 20 companies from Asia and the United States that invested in Avalanche. The most known is Andreessen Horowitz. Otherwise, there are no strong backers for the network. Avalanche and GRI. BLRD, a subsidiary of GRI that aims to promote Web3, announced that it will run Validator's Node and Avalanche back in October 2022. GRI is an established gaming and internet Japanese company. Avalanche and Alibaba. In December 2022, Alibaba Cloud announced that it will enable users to launch Validator's nodes and the Avalanche network. Avalanche and Amazon. This year, Avalanche Network announced that Amazon Web Services will support its infrastructure and enable users to run nodes on the network as well. Community. Avalanche Network is present on most social media platforms. You can find a comprehensive list of all their accounts on avax.network/community. As for Twitter, they have over 850,000 followers, but a very low interaction with their posts. It seems that the community isn't as strong for the project as it is for the other projects I reviewed so far. Tokenomics. AVAX is ranked 15 by market capitalization and is trading at $20 at the time of this video recording. It has a maximum supply of 720 million tokens, of which half were available on the mainnet launch, and a circulating supply of 315 million tokens. The ICO had one seed sale, one private sale, and 3 public sales with a price ranging from 33 to 85 cents. The initial distribution of tokens implied different vesting schedules as follows. The tokens from the private and public sales had between 12 and 18 months vesting period and are now unlocked. Most probably they were already sold since the investors had anywhere between 100 and 20x return on capital when AVAX reached its all-time high. The foundation received 9.26% of the tokens with a 10-year vesting period, and 10% of the tokens were reserved for strategic partners and the team with a 4-year vesting period. 2.5% of the tokens were airdropped with a 4-year vesting period as well. Currently, 64% of the supply, over 271 million tokens, is staked. The annual staking rewards are 8.5%. You can find the staking calculator on avax.network/validators. The link will be in the description as well. The top holder wallet has 2.3% of the supply, meaning 7.3 million tokens, and the second has 1.5%, meaning 4.75 million tokens. The other wallets hold less than 1% each, which means that the token repartition is fairly decentralized. In the 7.3 million tokens wallet, there are wrapped AVAX, which means that the tokens should be locked in a smart contract somewhere, maybe in DeFi. The number of new unique addresses has seen a steady increase since the mainnet launch, and Avalanche now has over 4.7 million unique addresses. However, the number of new daily addresses has seen a decline after December 2022, and it is now around 5.5 thousand. The number of daily transactions shows low demand for the network after the peak it had at the beginning of 2022. Another interesting chart is that of active addresses on Avalanche, which also shows low demand for the network. Overall, it seems that Avalanche needs to bring something new to the network to raise interest. So far, the network supported 224 million transactions, which generated over 2.1 million fees in AVAX that were burned. The median gas price for a transaction is 1 cent. All the fees in the Avalanche network are burned, increasing the scarcity of AVAX and bringing value to all token holders. Chart. AVAX is now down 85% from its all-time high, and it bounced perfectly from the $10 level, which represented the support dating back from January 2021. On a weekly time frame, the trend doesn't change until AVAX breaks the $28 resistance and turns it into support. On a daily time frame, AVAX broke the descending trend line, and the potential midterm target might be $31. In the short time, AVAX could have a correction after forming a routing bottom and hitting now a daily resistance. The daily RSI confirms a possible short-term correction. I would like to see AVAX consolidating under the $21 resistance line before breaking it and targeting the $28 to $31 level. Technology. Avalanche uses an innovative proof-of-stake consensus mechanism and can theoretically scale its transactions per second to infinity through subnets with a low latency of less than 2 seconds. Although Avalanche is highly scalable, the average number of transactions per second is 20 on all subnets for now. Also, Avalanche is Solidity compatible, so Ethereum virtual machine can run on the Avalanche network, and the fees are a tenth of what they cost on Ethereum. Currently, there are 1,230 validators and almost 64,000 delegators securing the network and offering a fair decentralization. There are 44 subnets and 35 blockchains building on top of Avalanche network. Ecosystem. Avalanche has a growing ecosystem, with DeFi being the most popular feature used on the network. Trader Joe and Pangolin are two of the most known dexes built on top of Avalanche. There are a few games and other projects building on top of Avalanche as well, but nothing that could increase users' interest. For a list of projects, check core.app/ecosystem/projects. Trader Joe. Trader Joe is an all-in-one solution DEX on Avalanche network. On Trader Joe, you can trade tokens, lend, earn yield by easily providing liquidity to pools with their Zap function, or stake your Joe token. The platform has an interesting staking model with two use cases for their token. You can stake Joe to earn VJoe, which can boost your yield on a select number of pools, or stake Joe to earn SJoe, which will yield you a 3% in USDC on your Joe. Trader Joe also has JoePegs, where you can trade Avalanche NFTs. Competition. Avalanche has strong competition from Layer 1 projects, but also in the interoperability area too. It has competition from old established projects like Ethereum, third-generation blockchains like Multiverse X, Polkadot, Cosmos, and new projects like Aptos and Sui. It will be hard for Avalanche to get ahead of them without building something that will attract users to use the network. Regulatory issues. News about the regulation coming soon to the cryptocurrency space emerged last week as the Biden administration asked for clarity in the blockchain world. As we know for now, only Bitcoin is seen as a commodity, and the rest of the altcoins are in danger of being deemed securities. Avalanche making no exception. Risk Management Model. AVAX is on mainnet, so it has a finished product being fully functional, so it gets 2 points. It has a max cap supply, a fair distribution of tokens, and it is a high cap project, so it gets 3 points. It does fail to get a point for the circulating supply, which means more inflation to come for the token. It has a high number of nodes and is highly scalable, so it gets another 2 points here. The project has a public team and a good ecosystem, but it fails to get points from the roadmap and institutional demand. Overall, AVAX gets 8 points, and I would treat it as a speculative trade and not a long-term hold. These were the objective stats about the Avalanche network, all the good and all the bad news so that you can take an informed decision in the future. Thank you for staying with me until the end. If you liked my video and want to support my work investigating this project, please consider hitting the like button and subscribing to my channel so that I can keep on creating quality content for you.